Hello, everyone, and thank you for joining today's live stream. My name is Tammy DaCosta, and I am representing CoinW. So, even though this is about crypto, the weekly wrap, there's quite a lot to unpack at the moment, especially in terms of what's been happening in the broader economy throughout this week. So, we're going to, as usual, go through the presentation. And then just to reiterate the fact that this webinar or this live stream is for it's for information and educational purposes only. It should not constitute as investment advice. Now let's look at what's been the big drivers. And this is not just for crypto, as I said, it's for the economies as a whole and for global markets. If we look at indices and how they're performing today, they really well. This is showing the monthly. This is on TradingView. As we can see, the monthly overview, considering the fact that it is only the 4th of April, we can see that there's been an extreme sell-off in markets, and this just reciprocates the broader economic woes or those recession fears that have resurged throughout this week. For crypto, on the other hand, we see that Bitcoin, this is, I actually showed the yearly for some reason, but we see when we actually go to the charts, we're not actually having as bad of a sell-off as we've seen in stocks over the recent days, especially with regards to the Trump tariffs. And we're going to just touch on that. And then we are going to look at some setups and some things that we are going to need to be aware of. So what's actually been going on in markets? So as usual, America is driving sentiment. Once again, the United States is still the world's largest economy. And since Trump has come back into power and was reappointed in November and took presidency again in January, there has been an extreme shift in sentiment. Not only a shift in sentiment with regards to what's happening with crypto or with risk assets, but as I said, a lot has changed in a very short period of time. So just to touch on some of those things or some of the themes, this on the chart on the screen is the S&P 500, and this is showing, so S&P 500 is often considered the benchmark for stock indices. It does represent the 500 largest companies in the United States, and this week has been a brutal sell-off. So this now ties into those tariffs that were announced on Wednesday, which we will touch on. But so far this week, we can see there's been a decrease of over 7%. So that is really extreme. I think it is the largest sell-off, well, basically since the COVID pandemic. And we know that with the global lockdowns that was announced in March 2020, we also had that same fear, but now this is different. But it's just showing that now that optimism that has been fueling the stock rally, especially actually in the lead up until now, we still saw in the beginning of the year, even after the inauguration, Trump's inauguration, even though crypto actually suffered quite a big blow, stocks or US stocks were still managing to actually post new time highs or record highs. And now we're seeing a lot of that positive sentiment has been wiped out. So as it shows on the screen, we are now back, we're going back to September 2024 levels. So as I said, what we need to also consider or need to be aware of is the fact that a lot of times, even though prices have been rallying and we've seen consecutive gains, when those recession fears hit and when economic fears hit, a lot of the times prices, and this is just in general, prices tend to wipe out or tend to have or decrease a lot faster than the initial rally. So we need to take that into account. But let's look at what's been going on this week. So 3 major things that have been playing out through markets is the US reciprocal tariffs that were actually higher than expectations. And just to touch on this, US reciprocal tariffs, basically, Trump has put a lot of focus on tariffs. So tariffs are the prices or the increases, we can call it the taxes or levies that companies will now need to pay for when importing from other countries. The whole point of tariffs is to increase production in the United States. And he has pretty much said from tomorrow, there's going to be blanket tariffs, which means 187 countries will now be facing additional tariffs they're going to have to pay, US companies will have to pay 10% on imports from a whole wide, from 187 countries. So those blanket tariffs are going to be 10% on basically any countries. But so that's going to come into effect tomorrow. But now what happens is there's a lot of countries that are now going to have even higher tariffs. For example, South Africa is going to be, so imports from South Africa are going to face a 30% increase. From China, 34%. And remember, China's already been exposed to 20% since Trump has actually come back into power. So that means that Chinese goods are now facing 54% if we take it into totality. And those higher increases are going to take effect from the 9th of April. So that is next week. So that's been a major theme. And this obviously, for what it means for global markets, it means that those US companies now have to pay if they want to get materials, and there's a whole lot of other tariffs that have been announced throughout this year. So, for example, aluminium and steel are also facing an additional 25%. So for any aluminium and steel that's imported to the United States, that is going to face since March, those imports have faced 25% increase. So this means the cost of producing, or the cost of actually getting those goods, is now increased. And it all comes down to who pays that. Now, are the US, and we've seen the US, companies there, a lot of them have now been saying to those, to the companies or to the manufacturers, they are now saying, okay, well, this has pushed our cost of production higher, so now you actually have to incur those costs. But overall, it just means that the cost of goods becomes dramatically higher. And today we've seen another fresh bout of, basically fear come into markets, because China's now retaliated and said, okay, cool, to the US, all right, fine, so you hitting us with 34% tariffs on our imports from the 9th. So from the 10th, all US imports are also going to face 34% tariff increase. So on the whole, or the broader economic, as I said, the global economic forecasts are now taking a knock, because the fact is now we've got those trade tensions that are rising. But overall, to just put it in perspective, plain and simply, this just means that we are already in an environment where prices have been increasing, inflation rates have been high, and now this actually makes the economic outlook globally a lot more dismal. Okay, then what we had today is we did have March NFP reports, which is the US job data, which was a really, really big upside surprise. And that was 228,000 new jobs were added to the US economy in the month of March. The estimate was 135,000, but then unemployment rate actually ticked slightly higher to 4.2%. But still, for the job market, this was a very optimistic job print. And generally, we would see a lot of optimism for crypto and for stocks with regards to upbeat NFP reports that would usually boost sentiment. But today, it didn't actually happen. We didn't see that follow through. And this just points to the fact that we've got those increased recession fears. And so assets as a whole are not, or markets as a whole are not doing really, really well. We've seen oil prices really also take a big beating this week. Gold managed to retest new record highs, and that was Wednesday following those tariff announcements, where gold futures rose above $3,200, at least temporarily. And for crypto, surprisingly enough, well, as I said, this all points to financial crisis. Okay, so just touch on this. So basically, we had a lot of now global banks with the likes of JP Morgan, Goldman Sachs, and so forth. They are now saying that the likelihood of global recessions is, well, JP Morgan is now saying there's about a 60% chance that we can see a recession, global recession. Goldman Sachs also increased their forecast of recession to 35%. So overall, it's just not a very good picture. This was from JP Morgan earlier today, where they said if they're using the IMF model, and they're saying about a 20% increase in US tariffs throughout 2026, they're saying that the likelihood is that we're going to see GDP, or at least for the main economies, this is going to translate to approximately 2% decline of GDP. And that is huge, especially because of the fact that we've already been seeing GDP growth forecasts diminishing, and now this just overall, it's not a pretty picture. But now let's go to Bitcoin. And actually, I was really, really impressed with Bitcoin's performance and with crypto's performance. Since the January high, since reaching that January all-time high back on the 20th, we have seen prices have taken, well, it's been giving up a lot of those positive gains. However, this week, while we saw stocks sell off, we actually saw crypto rising up to those tariffs. And on the day of those tariffs, on Wednesday, crypto did really, really well. And even though now we have stocks globally selling off, Bitcoin is still, it did suffer a bit yesterday. It did decline over 5%. But in the beginning of the week, we saw a lot of optimism come back in, even though there were those tariff threats and so forth. Bitcoin's managed to really, really keep quite a resilient tone. And that's very, very positive, in my opinion, given the fact that now it's still managing to maintain a positive sentiment above 80,000. However, if we're looking at this weekly chart that's shown on the screen, we do still see that zone of consolidation. and that is shown by those lower wicks or the longer wicks, and those shorter body candles. So that does mean that we are still in the zone of consolidation. So we still need some follow through. And on this weekly chart here, I do have 3 moving averages on the weekly time frame, and that is I've put the 12-week moving average, which is equivalent to 1 quarter. So if we look at that, that level currently is holding as more crucial resistance, and that is around 91,853. And then, so that's the pink line over there. Then we've got the weekly high that's also providing additional resistance, and that is 88,499. So if we are looking for that resurgence of bullish momentum, we are still going to need to break through a few barriers towards the upside. Okay, we also have the 4-week moving average, and that is at 83,499, so around 83,500, and that's that blue line there. So that is now imminent resistance. And then towards on the 52-week, which is representative of 1 year, 52 weeks in a year, we've got that support level, while that is providing additional support, and that is at a level of 76,149.3. So we do have these weekly moving averages that could actually play a role in helping us just to see price action, because once again, these are averages for those periods that we've now discussed, and it just could, when we do tend to see breaks of some of these crucial levels in terms of technical indicators and so forth, a lot of the times that does actually manage to give us at least short-term, some short-term guidance. So these are the levels that I'm looking at, while with regards to moving averages, and those are the weekly timeframes. However, with this TCI at the bottom here, so this is the commodity channel index, and the CCI is an oscillator, so meaning that it ranges. So we see here, there's at the bottom, there's a level of 100. And so the main range is a level of negative 100 to positive 100. So when prices, or when the CCI is above the positive 100, that's often an indication that the asset, in this case, we would be talking about Bitcoin, that it may be entering overbought territory. And when it's below negative 100, that is an indication that it is potentially oversold. So currently, because we've also had quite a, especially in February and March, in the first quarter, we did see crypto giving up a large portion of those gains that it received post the announcements of Donald Trump's victory. And now prices are beginning to settle. And however, on the weekly time frame, the CCI is still lingering in oversold territory. But then again, the fundamental outlook, or what's happening, fundamentals, and in the macroeconomic backdrop, this is still, it does still make sense, because crypto is still a risk asset. But another important thing, and this is where we go to when we actually go look at the chart, and we look at the fear and greed index and so forth, we can also see how Bitcoin has almost adopted a safe haven appeal. So Bitcoin dominance this week has once again gone above 60%. So altcoin season is not here. I'm still very skeptical about it actually happening this year, just because there's a lot of risk, and altcoins, they they're pretty much like growth stocks. It's just there's a time and a place for it. And at the moment, I think as long as there's all this geopolitical risk and these trade tensions and trade wars that continue to escalate, it is not the time for, well, a lot of clients, both institutional and retail investors, are more likely to look for safe havens. And with regards to crypto, Bitcoin is the asset that has that safe haven appeal. Well, in my opinion, at least, because now it is still we do have the US still wanting to create that strategic reserve. We know that institutions have been piling into Bitcoin, despite the whole negative growth outlook for economies. So that has kept Bitcoin bulls afloat, and it has actually still supported that positive narrative that we have been seeing continue to play out in Bitcoin, especially in the broader, economic front. So that's just my opinion with Bitcoin. And then, as I said, we've got some of those weekly moving averages that I did find really, really interesting, especially because of the fact that they have actually, if we're looking at the price action over the past few weeks, we have definitely seen those levels actually come into play and provide support and resistance for Bitcoin, at least for the short to medium term moves. Okay, now if we're looking at the daily chart, okay, so we can see definitely we still see that downward sloping trend line from that January high, which indicates, yes, there has been a shift in sentiment, but we also need to take into account the fact that prices really, from when Trump was announced president, prices really did surge. So now this has been more of a correction. And once again, we see some of those other moving averages on the daily time frame. So that have actually helped provide temporary support and resistance for those short-term moves. So the reason I've also used moving averages here is because there are a lot of technical indicators. So in technical analysis, we're looking at price action on charts, and we're looking at potential levels that can actually be important, engaging on how prices may actually react. So if we're looking at those technical indicators, there are hundreds of indicators. There are chart patterns. So this can be really, really overwhelming, especially for beginner traders. So if I'm talking about things like, if we're talking about Fibonacci levels, which I'm a huge fan of, then yes, to me, those are important because they're taking historical moves of prominence, and then we're projecting whether or not those moves or levels from those moves could actually factor into, initiating price levels in the future or so forth. But this can be really, really complicated, which moving averages, in terms of the ones that I've been using, they're simple moving averages. So if we're looking at the daily chart, as is displayed on the screen at the moment, it's simply saying, okay, for the past, for example, the 20-day moving average, that's the pink line over here. That's simply saying, okay, if we're taking the closing prices over the past 20 days and, we're dividing it by 20, then what is that moving average? And then it simply gives us a line, and then we can use that as another base case or another potential indication of how prices have been behaving, or where they might actually continue to go. So it's just nice because, to provide some visual guidance. And these often do tend to actually play a role, or more often than not, we actually do see how these indicators or moving averages, which can be so, simple, but they are also one of the most effective indicators, and they're used by both beginner traders and experienced traders as well, including many large institutional players that also use this in some of their more complex financial modeling and so forth. Okay, so now before we get onto the other charts, we do still have other important data that we can look at on next week's agenda. But what we also need to be aware of is now, after we had that US job data, we are also having the chairman of the Federal Reserve, Jerome Powell. He is, or he might actually be talking at the moment. And that could also provide an additional, under general circumstances, I would say that would be a huge catalyst that I'd be looking at, same as the non-farm payroll report. But as we saw with the non-farm payroll report, even though it was positive and that generally would boost demand for risk assets, we are seeing those tariff threats. Well, it's not threats because it's actually now, it's now coming into play. But we're seeing a lot of that tariff uncertainty and recession fears have been and should continue. They're more likely to actually be the crucial drivers of price action. So I think for the imminent move, we're actually looking, on next week's agenda, after Jerome Powell speaks today, I think from that speech, I'm looking at potential signs of how he would, or how he and the Federal Reserve are actually factoring into those tariffs, what their outlook is. And this could bring some reprieve in terms, if we see him actually say, okay, fine, the Fed is more prepared for a recession and so forth. And this will also play a role in looking at interest rate forecasts. So next week, Wednesday, if we look at the agenda for next week, Wednesday, we do see those FOMC minutes. And this is basically where the Fed's also going to give us an indication of what they expect to do with interest rates. And lower than expected interest rates, that's usually good for Bitcoin, for crypto, and it's good for stocks. But as I said, at the moment, it's all on those tariffs and what happens. So where we will see more follow through, if, for example, we do see the US now start discussions with other countries, and if there's more of room for negotiation and those tariffs don't actually get implemented or as harsh as they were suggested on Wednesday, then yes, we can see more of a follow through and more of an upbeat tone for risk assets and for crypto. So those are the factors that I'm watching. But if we, on the economic front, we do still have consumer, we've got balance of trade data for Germany, and that is balance of trade. So generally, the positive trade data, and that's what Trump's also saying, is usually this means if it's positive number, it means that that country exports more to the US than it imports. And this is basically the main reason for all these tariffs. So we'll be looking at that data from Germany on Monday. And this is also going to be an indication of how Germany's trade balance, if it has actually been impacted at all by just those threats of the tariffs in like leading up to now. But where we're really going to see these balance of trade data points, where we're going to see the differences is in the upcoming months after those tariffs are implemented. So that is on Monday, and then Tuesday we've got Australia, we've got some confidence data. I'm expecting that also to weaken because of that fear coming in. But there are still quite a few economic data points that we need to be aware of. But this is scheduled event risk. What's unscheduled is, for example, today where we saw China's retaliatory, what they've said about how they're going to actually, counteract the US. And it's a lot of those comments now and a lot of that unscheduled event risk that is actually being the main contributor or drivers of price action. So now let's quickly have a look at a few other markets. Well, I'm just going to share my screen quickly, and then we are just going to look at the broader crypto environment. Okay, so on the screen here, as I said, we're looking at, this is the daily percentage performance. So we see Bitcoin is actually up 0.19%. So it's not a huge upside move, but when we look at stocks, we'll see why this is actually really powerful, because of the fact that crypto has managed to be really resilient, and that speaks volumes at a time where economic uncertainty and geopolitical risks are so high. So on a daily perspective, we've got Bitcoin actually now trading above 83,294, and we did see that for Bitcoin in particular, we did see when those prices, when that non-farm payroll data did come out. Okay, that was over. Yeah. Okay, yeah, we did see prices this morning open. They were higher, then they did decrease. Then we managed to see, but prices didn't actually fall below the 81,600, which to me is also another very powerful indication that there is still scope or sentiment for crypto. It has actually performed relatively well, especially this week. And then we did have, as I said, that release of non-farm payrolls, where we did see prices then increase. So it was around this point over here. So in the lead up to that non-farm payroll data, we then saw, after quite a hectic sell-off, or we can see, this is the 30-minute chart though, we did then see prices rebound, and then they did manage to top above 83,000, which prices remain at the moment. So we could still see, as I said, if Jerome Powell does say that there's expectations that, the US is willing to actually, or the Fed is willing to help consumers or companies, then we could see prices then rebound. But at the moment, 83,000 is a key level. So now prices currently have just dipped below that. So this is also an important zone that I'll be looking at. So I'm saying between 82,000 and 83,000 for me is also quite important. Okay, and then from Ethereum's perspective, Ethereum has been a lagger. So let's now go to a daily time frame. And we've spoken about this before as well. But we can see Ethereum has really taken a knock. And this was from the December. If we look at prices in December, they peaked at just above 4,100. And now, recently, if we look at, basically yesterday, prices also, and we spoke about this in our live market insights actually, how that 1,750 level is really key support. So currently we do see prices now lingering above there. So for that, as long as prices remain above 1,750, there is still hope, but a break beneath that would make me really skeptical, and I would be expecting the potential for a further downside for Ethereum, with my next support level being at around 1,500. But if we look today, Ripple is doing quite well. Dogecoin is back up, even though we need to take into account that a lot of these coins have been suffering huge blows over the past few weeks. But as long as there's still some upbeat sentiment, I'm not ruling out the potential for a broader recovery. But then again, with those tariffs expected to now really come in and be set in place next week, a lot can still unfold, and any further recession fears or recession risks, if there's more fear that comes into the market, that overall is not it does not provide any reprieve for cryptos and for stocks especially. So those are the factors that I'll be looking at. I will catch up with you again on Monday, and then we can also discuss if there were some other potential developments throughout the week with regards to the factors that we discussed. We'll touch on Jerome Powell's comments, and then we'll go from there to look at some price levels that we now need to consider moving into next week. Thanks again for joining and for watching, and I will catch up with you on Monday. I hope you all have an amazing weekend and happy trading. Trade safe and just remember your risk management. Okay, goodbye.